So we're going to look at a distribution schematic model 2. Okay, so just like an accumulation schematic model 2, except upside down. There really isn't much of a difference except for that. Obviously, instead of demand, you're going to be using supply for the third tap, right? So that's the only difference, really. And of course, the way that the overall trending environment persists. So obviously, with the distribution, you're looking for an uptrending environment, ideally, rather than a downtrending environment. Otherwise, it would be called what? A redistribution. So there is a slight difference there, obviously. So we know that, and now we're going to take a look at some examples of how this can play out. Let's also recall what we talked about in the Accumulation 1 and Accumulation 2 series, where we talked about the return to zone considerations, having a high time frame interest zone where price is coming into. Is it an area that makes sense to even distribute from? You got to ask yourself this with any model. I'm not going to go through the exact same things that we went through in the last 2 videos, but we just have to know that this applies to every single Wyckoff model, right? The same things, the same characteristics apply, where you need to have common sense. Just please don't look for these models in the middle of nowheres and expect a high probability payout. Doesn't always work that way, right? And again, we're using this for the overall bias. We're still trading market structure here. We're still trading supply and demand here. I'm not going to repeat that exact same statement in the next video for the distribution model 1, but I just thought it was wise to mention this, okay? So let's take a look at what we have here, right? We have ourselves an uptrending environment from this low, but it's also a downtrending environment from this higher time frame pull. So down, up, down, up. It's only wicked across here. It eventually did close across, but that's only the daily. What about the weekly? Let's check the weekly market structure very quickly. We're, of course, back in time. From the all-time high, it's down, it's up, it's lower low, it's lower high, it's lower low. So where else would it make sense to distribute from rather than this supply range? Okay, obviously that makes sense. Now, could there also be some sort of one candle supply, like an institutional-based supply zone? Let's see. Let's go to the 3-day time frame. Zoom in a little bit. Oh yeah, there is right here. Look, we did have a 3-day supply zone that we just hit. Went a little bit past that, of course. It wicked a little bit past the supply, but that's fine. It's still a valid supply reaction so far. So technically, yeah, it's in an area that makes sense. Also, could this be a redistribution on a bigger scale? Yes, it could be, because you have that curling up effect, okay? This could also be a larger time frame redistribution. We need to be aware of that. Also known as a manipulation phase of this bigger range here, where you're ranging above the bigger range for a possible move down. So there's extra confluence. Also, you have yourself a liquidity curve. Okay, so another reason to go down, because this original low didn't accumulate properly because it was never taken. Okay, really good sign for the short, that is. All right, so now let's take a look on the lower time frames. Let's start on the 4-hour and take a look at what actually happened up here. Okay, so obviously 4-hour structure is a little bit funny here because you're basically looking at this high and then this is your higher low. Sorry, higher high, higher low, and then obviously that would be a higher high. But then you could basically look at this last leg here and you have a series of different points, right? Higher highs and higher lows all over the place. Higher high, higher low, higher high. So 4-hour structure didn't transition, but what about the final structure from this leg here, right? It probably did. Let's go to the 1 hour. Let's go to the 30. Might see it a little bit better on the 30. So quite clearly, if this was a range at some point in time, which it was, and then you would have pulled it up like so, then obviously you broke the range low with the close. So obviously it's a break in structure, right? Where it filled this inefficiency to follow. All right, well, we know that. Okay, cool. So we know that structure actually changed from bullish to bearish on the 30-minute and under. I wouldn't really call it an hourly break because it's not 2 down candles in a row. It looks better on the 30 where you have black and black here. So it actually looks a little bit better, but on the hourly, I wouldn't really call it that, but that's fine. We have a reason, right? Do we have a supply zone? Yes, we do. Look, there's still a supply zone here. Now, we're not going to short this directly because how do we know that's going to work? We don't know that. We wouldn't know that. So let's wait and see what happens if price retraces back within. So we're seeing a reaction off this supply, okay, which is great. Okay, so we came into a POI, point of interest, and now we're seeing a reaction. So now what we're going to do is we're going to go down to maybe 45, maybe 30, scale it around, and we're going to draw a range here. So from this high to this low would have been the initial range, okay? You could have started right there, and you could have pulled it up to here if you wanted to, but I'm just going to take it from where it actually hit supply. That's fine. It's all going to give you the same result. No matter what, you'd end up with the same result by adjusting. We'll start it from here because it looks a little bit cleaner. And we're going to look at, first of all, what does return to zone look like for even coming back up here for the second tap? Well, it doesn't look terrible because you have this curling down effect, right? So really, we could very well come back up to that high. So in fact, if we wanted to, we see a deviation, although I'd like to see the range confirmed first. If we get a deviation after confirming the range, we could even long this guy up towards that for the short back down again for the second tap. Because we know that with every Wyckoff model, you take out the initial tap, right? You could argue this was also a model 2. Yeah, sure, it was. But we're skipping past that because we didn't look at that right away. We're looking at the actual higher confluence one. This is not a higher confluence one, right? This is a little bit more crunched up, whereas this one's far more expanded, if you will. So we know this is a higher confluence trade. Let's see what we get. Well, we came very close to that midpoint. Now, you could argue that's good enough for you, right? For me, that's good enough. It came close enough to the midpoint. I'm going to break my rule a little bit here. If I see a deviation with a market structure change, I would give it a whirl. Hopefully, it comes up to that midline first. I don't know if it... No, so it didn't. It didn't. Now, unfortunately, I'm on the 30-minute. I don't know, because I'm so far back in time, if it will allow me to go much further down in terms of structure. I'm not going to really try because I know it's going to kick me out of the bar replay. So I'll just wait for this to break. Okay, so now I'm going to scale into a long, and we'll take it up towards that high. Didn't give you a retest. Oh, maybe one retest. Didn't really give you much of a retest, though, did it? All right. I like the way it's coming up towards that high because that's making me feel a little bit better about shorting this from a tap 2 perspective. There we go. Great. I like the way it didn't grab liquidity. It only grabbed one liquidity point, which was right here. And that was a minor higher low anyways. It was just a quick little higher low. It wasn't really significant, whereas the higher high to higher low here had multiple candles in a row. This was just a quick one. So it's not really that relevant. Okay, so looking at this now, you could argue this whole thing is liquidity, right? We have lots of dollar signs under this imaginary trend line of ours. Great. Return to zone doesn't look bad. It is kind of V-shaped here. I'm not going to lie, it is a little bit V-shaped. So maybe you want to see this guy break first, which would actually be a lower time frame, higher low. Okay, obviously every pullback or every bearish candle is a pullback. So knowing that, then obviously it's a higher low probably on what, the 2-3 minute chart, but we can't verify that. So we're fine. We're just in bar replay. It doesn't matter. I would obviously close my long the second that we come back within the range. And hopefully you didn't wait on the 15-minute like I did, because that would suck. But anyway, anyhow, it's a winning trade nonetheless. So in this example here, because we can't go to a lower time frame, we're not really able to use market structure to get into a short trade. So I'm going to skip on tap 2 unless we come up a little bit higher here. Fortunately, no, we didn't come up a little bit higher, which is fine. That's fine. In a live trading environment, we would have taken this based on lower time frame structure from this low to this high. So we know we have our tap 1. We know we have a tap 2, but you also had a tap 1 and a tap 2 here. So you got 2 and 2, right? This could be a reaccumulation for a move up towards this high to finish off the distribution for a move down. You see that all the time. Okay, this is more of a complex one, but that's fine. We want complex so you guys can see that. This always happens. All right. So in terms of return to zone from the high down for the third tap, doesn't look so great, does it? So hopefully on the move back up again, it gives us a reason, a decent reason to go like that, right? Let's see what we get. In the meantime, is there anything under the range low that could signify a Model 1 reaccumulation? Or is there demand remaining that has not been tagged following a break in structure to justify a Model 2 reaccumulation? So if it's going to reaccumulate here from a Model 2 perspective, there is a little demand range that was not hit that we just bounced into. You'd have to see a market structure change on a lower time frame before trying along here. Maybe a little risky in my opinion. Whereas I feel like the better option is going to be this order block with imbalance down here. Let's check the 30. Let's draw it up a little bit. We'll pick the bigger one. There's a 30-minute order block with imbalance down here that actually gave you a very significant move up before, whereas this move was not nearly as comparable to this big expansion, right? Like look at the difference in the red lines. So obviously this one looks a little bit better. Plus it would be one further deviation and it would justify a confirmed Model 2 for me. Why is it confirmed? Well, because you would break the range low. If you close below that range low, following tap 2, that's a very, very, very good sign that you're going to come back in the range for a lower high than a lower low into supply and premium section, right? So let's hope we get that. But if we don't, then it very well could turn into a 1. We got to be wary of that, right? All right, let's see what happens. So far, a little reaction up, but nothing fancy. Okay, it's trying. It is trying. Could be a lower high for a lower low. Was a lower high for a lower low. Okay, so that unfortunately failed. So if you were the guy that longed in here, hoping that it would come up to here. Hopefully you got out of that trade in time when you seen the first bearish break, which absolutely would have been around here. And now we have the possibility that we're going to deviate that range low one final time. And if we do, I'm going to long it up. That's a pretty nice sell to buy. So I'm going to actually try that. We're going to try a little long here. And we're going to wait to see how this develops itself. But before we do that, what do we have? Is there even a supply zone to short for that model too? Because you need to have a supply zone. Otherwise, this doesn't work. So we know we broke structure on the more important structure drawing, but we also broke structure on these points as well. Fractal, internal, swing. You got all three breaks here. That's excellent. So now let's see if we have a supply zone even short. Well, I can see one now. And it's actually part of a supply chain as well, which is even better. You're going from supply to supply. And I'll change the color of this supply so it's not confusing. I'll put it in black. Right? So we're going from supply to supply. That's excellent. There's a really high confluence area to short there. So entry, target. Let's say we're going to target this low point for starters. And then from there, we'll target the next point here. And then we'll see how far it goes down because we have this larger possible redistribution in play, which could take us down substantially. $13,000 dump, right? But of course, that's up to you. I'm just going to take it from a basic approach. I'm not going the swing trade approach here. So we'll be happy with that one target that we have set out here. So this is the pre-plan here, right? We're looking for about 3% gain on this trade. And, we're going to watch to see if there's any other supply. Let's take the bigger one. Let's take the 45-minute supply. It's kind of big though, right? Like that's really big. Because it is so big, I'm actually going to opt to look for a structure change if possible, because it might give me a better risk reward on my trade. But if it wasn't so big, I'd just set a limit order and just carry on with my day. Okay, because that would be a high confluence trade idea. All right, let's see what we get. It's coming in pretty aggressively, actually. Let's go to the 15. But to be fair, because it is a V-shaped recovery, you may opt in to be a little bit nervous, and you might say to yourself, nah, I'm not going to limit that anymore. I seen the way it was coming up so aggressively. I need a structure change now. So let's watch for structure. Remember, for shorts, it has to break from top down. We need to wait for something like this, right? Before we can even justify a trade. I'm going to pull that down to here. Wipe that for now, and we'll just watch it. We'll just mark this with the highlighter. So here, higher high, higher low. And once again, you had a higher high. For those clever folks out there, this could be also known as another distribution, possible distribution rather, where you had a range. We have tap 1. This could be tap 2, and we very well could come up after breaking structure once again on the range low for a tap 3 and then lower. 1, 2, 3. Okay. Now, I don't know if we're going to get that. I have no idea, but it is possible. So you can keep that on your chart if you'd like to. Structure just broke under that range low. Excellent. Now, is there a supply here is the question. I can't tell. Let's go to the 30. Very hard to judge because I cannot go to a lower time frame, but I'm going to assume that this is now supply and it's also part of another supply chain. Right, you're going from supply to supply constantly here. And from there, you might say to yourself, well, that would have been closed. And now we're going to talk about scaling into a short on the break. And if it gives us the opportunity for one more retest, we're going to find a short trade. The stop's going to go above this wick. If it doesn't give us that opportunity, that's fine. We got into the trade. And from there, okay, unfortunately, we didn't get that extra opportunity. It is what it is. So you would have been in partial trade here. And from there, you hit your target. There we go. So unfortunately, again, it wasn't really a complete model 2. You had the tap 1, you had the tap 2. But really, did it have to complete itself is the true question here. No, it doesn't have to. So whenever you have a primary Wyckoff model that hit the third tap, okay, very important. Whenever you hit the third tap area of a primary model, okay, the one that you're watching, the first model that you're watching, the bigger one, and then you see another model form near a tap or near the third tap, it doesn't have to give you more than 2 taps, okay, 1 and 2. That's sufficient enough. Because you already had a third tap as a whole here. Okay, it didn't have to come back up. Was I hopeful that it would? Yes, I was hopeful. Did it happen? No, it did not happen. Is it required to happen? No. No. It's not required at all. The better approach in a situation like this would have been to watch the structure from this low, which was the micro range low, up towards that deviation high, or the second tap of this micro range. And when that broke bearishly, probably right around here, you could have entered short, which would have gave you a much cleaner risk reward than what I entered on. right? But we can't do that because we're too far back in time. And TradingView doesn't like that. So was this a successful Model 2 distribution? Absolutely. So let's take a look at one more. Let's see if we can find something that's not as clear cut as the previous one. All right, let's go to about, see that high peak right there? Let's go in that high peak, see what we get. Let's go back to the 4-hour. This is an interesting one because you have this bigger range here, clearly. If you were to pull it with your range tool, you have a swing low. You had a swing high. You deviated that swing high right here, and then it came down halfway. Reconfirm the range. Came to reconfirm the range, and then it came up past the range high, and it's kind of hovering above, just like the last example where you have that curling effect, right? But ultimately, we're just going to take it from a more basic approach. Let's go to 1 hour. Did this do anything significant? Well, yeah, it purged the range high. Not only did it purge out the range high, it also took out this liquidity point over here to the left, right over there, which is pretty significant. It looks like a significant point for me because it's an old structural point that matters. And from there, we have ourselves a swing high that forms and a swing low that forms. Okay, let's go down to the 30. So what can we do? Well, we don't know if it's going to be a 1 or a 2, but we always trade tap number 2 if given the chance. Let's see if we get tap 2. So in this case, it looks like it's deviating the low. We're going to pull it down lower. Why did it deviate the low there? Well, because there was a demand zone right here, right? In fact, you could have looked to scale into a long trade up towards that range high if you'd like to. Close it out, close enough to the high. And now we're going to look to see if we can get a deviation past this high point. Oh, there we go. And from there, you would employ the use of market structure from this low to this high. If we see a shift in trend, which is very hard to judge on the 30, let's try the 15. So below this point is definitely a structural change. Then you can scale into a trade. Again, I know that because I know that every down candle is a lower time frame structure, higher high and higher low. So if we get a break below that point, you could have already started to scale into a short trade here. So you call this your tap 1. We have our tap 2. Now, of course, it still would be wise to pull this up and have these marked out, right? So we don't forget that's 1 and that's 2, because it very well could come up and do that, right? We're aware of that. So in saying that, can we get a structure change, like a relevant one here, like a little bit lower, breaking this point here at least, and then come up for that third tap on the high into an area of supply? That would be awesome. I hope so. All right. So, but what do we have here? Well, we know there was a structure change. So we know that we came into a demand range here. Price is holding that demand range for now. So it very well could produce another move up from here. Okay. We know we have our tap 1. We have our tap 2, as I mentioned. And ultimately, we have a supply range here. Right? So there is a supply range. Now, it's not just any supply range. It's also a flip box or a flip range, right? Look at this. So you had a reaction up demand. Demand failed to put in a higher high. And then we came down through. So really, this would be a high confluence area to look for shorts in as a Model 2 for a tap 3. All right, let's see what we get. Does it come into that supply box? So it does come into supply. You can look for that short trade. Once again, I had to cancel mine because there was a mistake. I accidentally hit the wrong time frame for those wondering why it deleted itself. And from there, do we have a good return to zone? Yeah, we actually do. It looks like it could very well come down from here. And it has come down from here. Okay, great. So if you did not get into a short trade from here, you could also try to chase it a little bit if given the opportunity. So you can look for yet another break, find yet another supply range, maybe take an internal one like this, which is part of a supply chain, and look to see if we get a structural change coming into that box. And you actually would have had one more entry there, and then it came down and it hit the low. Let's see how far this Wyckoff model takes us down. Does it do anything significant? Oh, yeah, wow. That's one heck of a model. Right? I like that model. So I'm going to close that out and call that a winner, right? So we have yet another Model 2. Now, really, you could argue that this was the second retest of the Model 2. And sometimes you get those, more like a textbook version where you had that final LPS, right? Whereas this is more or less technically the third tap here, in my opinion. This will be the third tap officially. This is more like a retest of, one more chance. You had one more chance because it didn't come down so aggressively. Right? Is it wise to watch volume with these models? Yeah. I mean, if you're totally into volume, absolutely. Because obviously when you see volume picking up like this following your third tap, you see how it starts to pick up at the end? That's a better sign that it actually is going to break down lower. Right? So you can definitely incorporate the use of volume. Do I always do that? No, not really. I don't really need to because I trust structure and I know what I'm doing from an order flow perspective. But is it wiser, especially for newer traders, to keep an eye on volume with these models? Yeah, heck yeah. So there's a great little distribution model. And of course, you can always go through the videos on how to go through these models. I talked about it in the backtesting video. And you can practice these all over the place. Like you can go back to an area even like this, right? And you go, oh, look at that. We had one peak here, a peak that was higher, and then it was a lower high, and then it went down lower. So I wonder if that could have been a model 2 distribution, right? And then from there, obviously, we can go down, take a little glance at it on a lower time frame, maybe like the 5, the 3, and let's see if it really was. In this case, it might have been. Let's see. Let's go to the 10. Technically, it was, but it came into a supply range. And it's funny to say this, but really, the third tap wasn't here. It was actually here. Okay? I know it looks funny, but let's actually go through this one. So price was in a local uptrend because you can see price pumping here, right? So high to low. Let's pull high to low. High to low. You had a deviation of the low. You could have longed it up for the second tap on the high here. Did price do anything significant for this to even be a local distribution? Yes. Why? Because the second tap just so happened to run a local liquidity point that had many equal highs. So this was something significant. Great. Okay, cool. So could you have traded tap 2? Yes, you could have, right? With a structural change, of course. But maybe you didn't do that. Okay, how would you get into the trade? Well, this is how you do that. So once you've seen the tap 2 break something, and of course you can't see it on the 5, but if we go to the 3 or the 2, we might. Let's go to the 2. On the 2-minute time frame, you can clearly tell that structure broke from left to right here from the uptrend, right? And I say the uptrend, I'm talking about the up, down, up, right? So it broke from high to low structure. That's great. So we had that flip in structure. This was now a weak targeted level. There's no wicks on that low either, which looks kind of crappy, meaning that it has a high chance of being run. And then you had a supply range form right here. From the top down, look. Down, up, down. This is an internal boss, but it's still a supply range. So that's what I would have picked as my supply zone for this short. Okay, and then from there, if you want to get creative, yes, you could have tried watching for a structure change or tried scaling in, or you could have put your entry like a little bit up in there for a better risk reward on your trade. I'll see if we hit this right about here for 3%. We'll see if we get it. Technically speaking, though, this would have been the third tap because that's when it first hit the box, right? Okay, trade initiated. Seen the little reaction coming into the zone we wanted. And from there, voila, right? We hit the target. Great. And this was a very tiny distribution. A very, very tiny $111 distribution range. But it was a valid Model 2. Tap 1, tap 2, break a structure, which is always the riskier one, of course. It didn't break the range low first, but it's still a break nonetheless. But there you have it, tap 3. Or you can call this whole thing tap 3 if you'd like to. I generally look at the whole thing as a tap 3 when I have that kind of situation. Now, if this right here had have broken this, like let's say it had have actually came down like this, following this guy right here, then you wouldn't really want to see this over here, okay? Then you miss the trade. If it comes back up after that and breaks structure again bullishly, then you got yourself a bad distribution model there. Did you make a mistake? Right? And that's what you have to ask yourself in situations like that. But that's a very nice little model that we just found that happened on August 7th of 2023 on the 2 to 3 minute time frame, maybe 5 minute range if you want to call it that. But they are definitely all over the place. Now, again, this is still what I call a sketchier one. Why? Because it's a very local one. It's a very tiny model. And is it really going to be worth it from fees to enter something like that just for a $100 move? Maybe not, right? It's not that significant, but can you still trade these for practice sakes? Yes, you absolutely can, right? You can still grow your account with them as well. And that concludes what we're looking at for distribution model 2. The next thing we'll be talking about is model 1 distribution.